All right, guys, just wanted to make a quick update video from yesterday. So we talked about the order block and we talked about the propulsion block and how these were pretty important levels. Now I want to drop it just to today's price action and discuss that just a little bit. So you can see we traded into it yesterday and then traded up, filling that gap. Now today, why was today's price action so bullish and why was it not wanting to move lower? Well, obviously, a lot of the work had already been done. And remember, we were in a high probability buy area because of IPDA, right? We've been talking about this whole IPDA data range. We had this buy side liquidity level. And again, our pivots, we cut everything into quarters. So this is 75%, 50%, 25%, and then 0. So the pivots are just those cut in half. So if we cut the high and 75% in half, you can see we overlap with that pivot. Same thing here. So that's why this level was significant as far as reaching up today. Now, what clues did we have that it might reach up? Well, one of the leading clues is the low of the day. Anytime we have an order block that's at the low of the day, that is paired with a fair value gap, right? So right here we have an order block. It is at the low of the day. These dividers are showing us each day. Also, right here, you can see that it did fill, but all you want to see is that a fair value gap was present. So you can see right there, we actually filled that. So this order block itself is high probability. Let me just highlight the fractal order block, the one on the lower time frame. We'll cut it to the 50% level. So this here is our really high probability area where we can really start knocking out some really solid risk reward trades. If you put your stop below and you enter at that order block, you'd have been up over a 10-to-1. So this is a tough trade to grab. So say you missed this one, but you can still see that this occurred, right? So you would just measure your fib here and you would look for retracements. Now today it did not have a retracement. So how can we use price action to help us with that? So right here, you can see we fill in that fair value gap and we run into this bullish breaker. So why is this a bullish breaker? We went up and this was the old high of the day. We traded down and we stopped out a low, small little change of character here, a little break of structure. Now, as it trades down and takes it, retail is going to be chasing that short and then trying to sell here in this fair value gap. Now, this is not high probability. Why? There's nothing supporting that high of the day, but there is stuff supporting here, especially on the higher time frames and with IPDA, right? So now by looking to buy this inside of the order block and under this low, we're getting back in line with what IPDA is trying to do, right? IPDA bought up at this order block, failed to take out the low, gave a huge propulsion block here. If you watch the last video, that's what we talked about, and then responded really bullish. And then today it runs straight up there, no problem, right? And retail is confused. Why is this happening? But we understand it's because we were in high probability here, right? This was a high probability setup, 15-minute. And I get this question a lot. The 15-minute is absolutely the best time frame to look for your price action on. Sorry, I'm trying to zoom that in a little bit so you can see that well. But the 15-minute is always going to be the best. And then I go down to the 5-minute and the 1-minute and kind of dance around that 15-minute frame. So like I said, if you missed this, there's no retracement. Once it makes that high, breaks down to the low, that's a bearish breaker. Now it fails. So if that bearish breaker fails, we had high, low, now we have a higher high. So we have a bullish breaker. That gives us our Reaper setup. Now it didn't come to the Reaper, but because this was our bullish breaker, that is where we can begin to consider that price. Now, what I would do is, this is not one of my favorable setups. I don't like going long when there's these huge gaps here, unless I have some confirmation. So for example, once this candle traded down, I would be comfortable using that as an order block, meaning as it trades through it, I'm looking to buy there. So my entry would be here, and my stop loss would be at the low of that order block. Now, anytime you're on the 5-minute or the 1-minute, you do run the danger of having to enter 2 times So once it runs there, you might have gotten pulled in and stopped out here, but that is how I'd build my frame. And then again, this is that if to pivot. It's part of the indicator. That's why I can't click it. I'd measure my entry to my exit, make sure that it's at least a 3-to-1, and then right there's my trade. Now, for example, if you're a scalper and you want to be a high probability trader, everyone always tries to catch the sniper entries. They're trying to buy here, or they're trying to buy this one here, and there's nothing wrong with that. But especially in the beginning, when you're learning, you need to focus on just seeing these things first, recognizing that pattern, right? Seeing the order block form and then create a fair value gap, and then understanding, okay, there's a good chance that this could be high probability. Because what are the market makers going to try to do? They're going to try to get double top, retail to chase. And then they're going to trade back and do their thing, how they make their money. Look, they come right back to the same setup pretty much. Sorry, my lines aren't straight. It's the exact same setup. So they use all this to consolidate, and then the Judas swing, run on price and slingshot higher. But what I'm saying, focus on seeing this happen first and not trading it. There'll be plenty of time in your trading career to do that. Focus on seeing it first, and then try to get in line with the high probability move. That's where I found the most growth and the most success is looking at that level and understanding, not trying to guess what's going to happen, right? Instead of trying to guess what's going to happen, I want to see something on the higher time frame really confirm price, right? And we're not just looking at today. We're looking at IPDA. We're looking at the context of the last 60 days. That is why I had so much trust and faith in these levels. And then you swing traders, right? Just camp out at the pivots. You wouldn't have even had to trade really at all. If you'd have just sat at the pivot, you could see yesterday, we traded right to it. As long as you knew we were bullish, you could go long there, set your stop at the low of the day, and you'd be in a huge trade right now. Nice swing trade. And you'd be looking for, it's not always a guarantee, but because it made this low and we're in high probability buys, there is a really good chance that we make it to this 50%. Now, my eyes are on this breaker here, this bearish breaker. Why is that a bearish breaker? Because it traded up above structure, then gave a mitigation high and broke down. But I'm looking at it from this structure, from this low to this high to this lower low. Thankfully, that's the mitigation block as well. So, but my eyes are going here. I want to see if there's any willingness to reject in here, or if we're just going to go clean to that 50. We've taken this pivot today, so I would assume that we'll cool off a little bit. I don't see a trade setup forming there. It could happen, but I think that they'll just use this to cool off, maybe pull back and stop out some of the entries in here, or maybe just go a little higher. But I do expect that 50% to get hit this week, so we'll see what happens. Y'all have a great trading week. Make sure you like these videos and subscribe. I'm going to keep doing them more often, and make sure you're checking out the free Forex course as well. Part 2 should be dropping next week. We're almost done with part 1, where I basically explained the market and how I see it and how I see that it works. But all right, y'all, appreciate you being on this video, and I'll see you in the next one. Have a good one.